What's up, guys? JJ Fade 23. I'm just gonna make a quick video going over my AVGO short from 1147, covered today at 1047. It's my second 100-point trade. My career, first one was on Tesla way back when it was sprinting towards 1,000. I think it made it to 970. And it just cratered at the end of the day, dropped 100 points in like 2 minutes. It was crazy. But anyway. All right. So pretty much, as you can see, AVGO has made a crazy move. You know, it's been going up ridiculous. If you look at, I mean, it's just going and going and going and going, hundreds of percent, you know, from the lows. But I don't really care all that much. I mean, I care about that, obviously, but that's not what the biggest thing was. As you can see, I shorted over here too, but I didn't get that much out of it. I mean, it was a great trade, but, you know, I shorted over here, I believe right here when it came back up close to here. And then I actually did try it right here too. If you notice, I wasn't all that hyped about it in the room, because this was like, see this 1, 2, I like, you know, first extension, yes. Second retest of the same level, I like. The more retests, I don't like it as much, because you might get a pullback, but it has a higher chance of breaking out. So as you can see right here, we popped up. We did a little fake breakout over this level. So I took the short there, and I wasn't going to just take a scalp for like 20 points when it was still this much extended in case it wanted to totally unwind. So, you know, I ended up getting stopped out. Pretty much even on that trade. I was short, came down, came all the way back up, took out my break-even entry. But now, after that, AVGO comes now, it breaks out, pulls back. I didn't try to trade it over here, kind of, even though 1,000 is a huge level. Guys, I love big round hole psych dollars and psych levels on large caps. They're great. This would have been a great short, this spike into 1,000. Now, real quick, I want to tell you, I used the 8, 21, 34, and the 4 EMAs because I just have them built into my system where they work perfect. So you guys will notice almost every time a stock on the daily chart comes off the 4 EMA, it comes back to it. See this? Like, see how the baby blue line is the 4. Look, we're going up, comes off it, comes back to it the same day. It's riding next to it. It comes off it. It comes back to it. Right? Comes off it. Comes back to it. Comes off it. Comes back to it. Comes off it. It comes back to it. Big gap up off it. It comes back to it. Now it's going sideways. It spikes off of it. It comes back to it. Off of it. Comes back to it. Off of it. Comes back to it. Back. So, you know, it's the same shit. I keep the 4 EMA on for extensions to the upside or the downside. Look right here. Drops down. Comes back to the 4. So now let's go to the actual trade. First of all, guys, not only the huge move this thing's made, now we have another. This is another 27% move straight up. All right. Green day, green day, green day, green day. 1, 2, 3, 4, 5, 6, 7 green days in a row. Right? And look how far it comes off the 4 EMA here. Never mind how far it's off the 8 and the 21. It's very far off. So now I also know 1150, that's a big psych level, big, huge level. Guys, see this right here? See this? This is what I call reversal volume. All right? Sometimes you get a lot of volume on a breakout, but usually, see this? It can usually, when you have a big move up and near the top, one of the candles has a lot more volume than the volume around it. All right? Sometimes you get a big move volume like this when it's breaking down or breaking out, a big volume day too, but that's not the beginning of a big move. That's the beginning of a big move, not the end of a big move, all right? So look at this consolidation pattern here, and then it breaks out on volume, but now when we start to spike at the top, all right, we get reversal volume at the top. So this is my first clue. Number one, we spike. We have 1, 2, 3, 4, 5, 6, 7, 8 days in a row, or whatever, 1, 2, 3, 4, 5, 6. 7 days in a row right here with reversal volume into a very, very big 1150 whole round number. So now I'm watching it right here. So now, what am I doing? That's this day, the reversal volume day, right? It starts to top out here. It pushes up. It makes a double top right at that big round level, right? Now, I could have took the short right here, honestly. When this came back up, I could have took the short right here. Put my stop above, a little above. Or I could have took the short on this little trend break right here. Whatever, you know. However you get in. You could have taken the trade there because you had a big extension intraday too. And you already should know, guys, when you have a possible reversal volume on the daily chart, that means you have high volume intraday, higher than the past days. Your volume forecast should be telling you, okay, this is going to potentially be a reversal volume, a higher volume day, right? So now, guys, another trick that I use, all right, so I didn't take the short this day, but I'm watching now. I'm stalking this thing because I know this is a reversal volume day. I almost took it right here. Once this failed that level and I knew this was a reversal volume day, I almost took it on this pop right here, but I was like, you know what, 38, 48, 50. I don't want to risk $12, even though it's still great risk reward if this thing tanks. I wanted it to go a little higher, you know, and I also don't like to take my swing trades right off the open spike. Be honest with you, there's so much volume that comes in right here. I just don't like to open swings right off the open. I usually like to wait to midday or near the end of the day. So stuff slowed down. I have more time to think. Now, here's the other trick. Heikinashis, all right? So, two things that happen here, all right? It comes all the way back up to here. Number one, I already know this day's reversal volume. Number two, here comes the fake breakout. Now, this right here is what I call a trigger for me. We're at a very key level, a psychological level that I already saw supply come in that act as resistance. Now, guys, I'm always thinking, what does the daily chart look like? This day was closed a little. Watch, let me go back, lose the Heikinashis for a sec. If we go back to this day, all right? This day closed as a little bit of a wick on the top. So now I know a lot of times when stocks do reversals, whether you're trying to go long or whether you're trying to short, they break through that day one high or day one low and they do a little fake breakout and then they still fail. So I was looking for that. Also, I wanted to get as tight at risk as I could and hopefully have like a 50-hour trade. So I'm thinking how maybe this will get up a double top up here or it will do a fake breakout. Those are the two things I'm watching for at the top for reversal. So here we go right here. We get the fake breakout. Now I'm instantly waiting for this next candle after the fake breakout on the Heikinashi to turn red. Once this Heikinashi on the 10-minute chart turns red and we got a fake breakout, I just get in the trade right here. As soon as I see this candle close red, I get it on the next candle. I think I got it at 11:47.30 or something, or 07. I forget what my exact average was. And I put my stop right here above. I don't stop out in front of whole dollars. This high right here is 11:51.82, so I put my stop at 11:52.10. And I'm in the trade. Stop is set. And now, honestly, guys, I thought I was going to get stopped out because I know this thing's a beast and it just keeps trucking and trucking and trucking. But I also saw this. I was talking about it in the room with guys. I'm like, damn, we got a fake breakout. It dropped. I was literally right here up already like 13 points, 14 points. And I'm like, guys, I'm not going for a 14-point trade on a stock that's this extended. That would be like, I'd rather just stop out and lose than take 14 points on a stock that's at $1,150. Guys, not to mention, look at this. I only need the Heikinashis for entries. So let me show you something. Now back on the daily chart, all right? I'm going to take profits. Why would I take profits right here, right? Right here somewhere when I'm still a mile off the 4 EMA and I know it should come back to the 8-2 possibly and maybe even the 21. And if we lose that, could even come all the way back to 1,000, which was my final target. So these are all lining up now. I'm in the trade. I don't have any plans to cover. I only took a tiny, tiny piece off at the 8 because it was already like 50 points. Then I took a little more off at the 21 because that's a place that a lot of times stocks like to bounce from. And then obviously my third target was a 100-point trade at 47. So I took honestly, I took the rest off today by accident. I got excited, was blabbing in the room, and I meant to leave a run to see if it would go to 1,000 and try to get 150 points. But what happened was earlier today, I had set a limit order at 147.70, which ended up being the low of the day, which is weird. But I had set a limit order there, and then I covered some at 1050 because that's a big whole psych level. I forgot that I covered some, so when my limit order got filled, it got me all out. I should have decreased the share size because I covered some here, just in case this had a big bounce off the 1050 psych level. But that's pretty much it, guys. Once I'm in the trade, I don't care. I'm not guys. This is the thing. So many of you guys sit at your desk watching every tick, watching this, watching that. It's like, dude, how are you going to hold for this long when you're doing that? I just look at it a couple times a day. It's bouncing around. It's going here. It's doing that. I got my stop set. I'm not even concerned. I know my stop. I know my target. Once we broke this trend right here and we fell out of this kind of triangle that I thought might try to break out again, now I'm like, okay, now we're below the 10-minute EMAs. We're starting to trend down. Now we're making lower highs. I'm like, okay, this is good. Right here, I was like, if you're watching this stuff, right, if you have a target and you're watching every tick, you might think, oh, if it gets over this high, I'm just going to take it off. It's going to go back to the highs. They do this on purpose. They push over that high, stops people out, and then it keeps taking it. So I don't even pay attention to any of that. Once I'm in the trade, I'm in the trade. You know, the thing has a lot of room to go down. Guys, remember this saying, easy up, easy down. Remember that for large caps. Remember that for small caps. Remember that for all caps. When a stock goes up this easy, it can come down just as easy. There's not a lot of consolidation levels on the way down for it to bounce off of. You know, it's just, that's why you see a lot of times small caps, they spike straight up so fast and they come right back down. Boop. Or like a pre-market, like small cap and pre-market, sometimes they go up, they go down, they go up, they go down, they go up. They're making higher lows, higher highs, a lot of levels of consolidation. And then intraday, they're bouncing off all those levels. They don't work nearly as good as the ones that go whoop, parabolic in the pre-market. They stuff at the open. They come out, fade all the way back down. There's not a lot of high volume consolidation levels for them to bounce off. So the less levels, now, so this is like, look at this. This is great. Kind of like over here. Even though over here, stock market was still strong, this stock was still strong. It only pulled back to the 8 and started grinding again. But, this is, up here now we're even more extended and even more, just getting a little somewhere. It's going to top out somewhere, Now, I'm not into catching tops, unless I get some good triggers or very good risk reward. Sometimes I won't even get that good of a setup. I'll just take the trade because I know, wow, I'm only risking $2 here to potentially get 30 or 40 or 100. Sometimes it's just worth a shot when you get a, like say maybe over here, this spike that day right up, it starts topping out on a smaller time frame. Maybe it's going to keep going, but hey, if you can get a trade off right below 1,000, risking $2 on $1,000 stock, you're doing all right. You only need to win one of those every 10 tries to make money when you risk $2 and you got a 100 share drop. That's 50R, right? So you can get stopped out a bunch of times. You nail one, you're good to go. So, but yeah, that was pretty much it. So, I'm hiking Archies. I love looking for fake breakouts, trend breaks at very, very key round whole dollar psychological numbers for large caps, and on stocks that are very extended off of the 4 and off of the 8, but mostly off of the 4 for reversal because they usually come right back. If you go around on a bunch of daily charts with the 4 EMA on, you'll see how quick, let's look at SPY real quick. I haven't looked at this before. Well, I mean, obviously I've looked at it, but I haven't, not right now. Look, let's just start right here real quick. Extension off the 4 comes back to it. A little off the 4 comes back to it. 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 Comes back to it. Comes back to it. Off the 4 comes back to it. You see what I mean? It's the 4 EMA is such a short-term moving average. The price can't stay off it for very long. Look right here. Makes a move up. Spikes. Off the 4 comes back to it. Right? It's just, It's just the way it is. Look, boom, off the 4 comes back to it. So you see something like this, a big gap up into resistance like this, way off the 4, ooh, and a good level there. That's, you know, it increases your odds when it's off the 4. If it's going up slow and the 4 is staying next to it, like right here, it's going up slow, the 4 is staying next to it, it really acts as support, so it's not as much edge as when it goes far off of it. And you'll see, just like today on SPY, it's getting to the downside a little. It got a little too far away from the 4 in the 8. And what happens? It spikes back to it, hits them, and now that will pull, as it dumps, it pulls them back down to it. So, yeah, I mean, I'm sure there's stuff that I'm not remembering, you know, and I didn't really like take a lot of time to figure this video out, but I think that's really can help you guys if you you know, I think that's just pay attention to that. I'll tell you another thing, and it didn't come into play on AVGO. It didn't come into play on AVGO, guys, but another thing that I like to do with large caps is measure the distance. All right, so do you see how AVGO came from 921 and fell down to here? Look at this. All right. So that's a 15.7% drop. That tells me that this is a pretty strong resistance. So when it comes back to it, the first retest, I say, well, last time it dropped 15% from there, so this time it should act as resistance again. If it didn't drop very far from there, it wasn't that strong a resistance, right? So if you look at other stocks like, you know, I'm trying to think of like, all right, for example, right, check this out. Look at this support right here at 472, all right? Look at this move, okay? So AVGO went 43% off that support level, all right? So that tells me that that's a hell of a strong support level because it bounced 43% last time it was there, and now is the first time back to it. So it's the first time back to this level that bounced 43% last time, and what do you get? A pretty nice 20% bounce off of it, right? So, you know, like look right here, even this level, all right? I don't like to trade off support levels that didn't bounce that far off of. This one right here, that's a 25.5% bounce. It comes back to it right here, and you get another bounce of 16%. So those are the levels that I'm really looking out for on the daily chart, right? Like right here, look how far it dropped. So if it came back to there, if this came back up to here, I'd be like, ooh, last time it dropped, you know, from here. I'm not going to be able to see it because it's going to be out of my screen, but you get the idea. It dropped 15% or 20% last time. The more the percent, the better. So, you know, it doesn't always work, obviously, especially if it just grinds right up to it. But that's how another little tip that I like to use, you know, amongst other things. But anyway, this video is not about that. Just about that trade. Thanks, guys. I appreciate it. And I'm not a financial advisor. I'm just a dude. Just a dude talking shit with a chat. All right. Thanks, guys.